So the bears are still out, the market is still down, but the Naira feeling a lot more pressure. What do you attribute that to?
Obviously, like you said, the bears are still out, and they probably will be out for quite some time. The Naira is still feeling a lot of pressure because obviously there's demand for foreign currencies to actually do a lot of transactions within Nigeria, as you're aware. And Nigeria being a country that doesn't actually produce to export largely, we don't have that same demand for the Naira as we do internally for the US dollar and other foreign currencies.
Okay, so it's a demand story. Let's talk about things that are going to boost this market, because you've got to move above this 19,000 threshold. News out that the agricultural sector is going to get a cash injection from the banks with a facility that's been created under the auspices of the CBN. 30 billion Naira to be unlocked. What's that going to mean for agricultural investments next year?
I mean, it's great news. It's fantastic news to actually hear that we have 30 billion Naira earmarked for the sector. And there's also a positive news that the interest rate they're looking at is going to be single digit. Having said that, the key thing is access to the funds from the people, or for the people that actually require these funds, which you would agree are usually the small-scale farmers and, you know, to an extent, large-scale farmers. So positively, you know, the single-digit interest rate is fantastic, but we also need a framework, in my opinion, a governmental framework that is similar to what you have in Brazil, where there's some form of price guarantee for the produce by the farmers. So if we have that in place, then there's more transparency, and there's more, the banks are actually in a better position to actually lend these funds to the farmers if there's a price guarantee structure in place, like I said, similar to what we have in Brazil.
So if all things are equal, Ugbake, in 2012, are we likely to see some agro-processing companies coming to market, new listings in that sector?
Possibly, quite possibly. We also expect a lot of participation from international companies as well, or firms, or players within that sector coming into Nigeria in 2012, because now the funding is in place. So that is one step done. The next step, like I mentioned earlier, is a regulatory framework, or a framework from the government that says we can guarantee some form of pricing for the produce that we have from this sector. So until that guarantee is there, we might not see the kind of participation we actually want to see in this market within that sector.
Other things that might boost the market are the energy sector reforms. And now that we have bids on privatized assets, we should be seeing a lot more investment in the sector. What sort of momentum are we likely to see? Again,
there's a problem with that sector, and the problem is the minimum investment required for power projects, the smallest thing you can actually do within that sector is about 80 billion Naira, for example. So that is a lot of money needed for that sector. So again, people need to be sure that when they invest funds in that sector, it's actually going to be used judiciously and the way they expect it to be used. So until we might see some form of collaboration within the sector, so smaller companies coming together to actually fund some of these projects within the power sector. But until there's a clear framework and belief that the power sector is actually going to produce the kind of results that investors expect, we might not see the kind of investments we actually seek for the sector.
Okay, one of the big issues in Nigeria was liquidity, and now that we know that we've got over 2.4 trillion Naira in assets, there is some money for infrastructure projects. Where would you advise the pension funds to be directing it? In government treasuries?
Can I say the capital market? Government treasury, yes, because obviously the kind of yields we're seeing in the bond market, we're looking at 16% returns within that sector. So we would obviously see the PFAs and those type of bodies invest in funds within that sector or industry. But I would say if I was a PFA investor, there are a lot of bargains within the capital market. I would also still put a lot of money within the capital market for long-term returns that I believe would obviously surpass what we see now currently within the government bond sector.
What sort of returns are we likely to see? Because as we know, the market is subdued, valuations are lower, assets are cheap, but I mean, you're getting 16% returns on the fixed income side. You're not getting that on the equity side.
Yeah, but we did that previously. And like I said to you, if you are a PFA, you must think long term. And long term by definition means 5, 10 years. You must have that horizon for the capital market. I mean, a stock, for example, like UBA is trading at 2 naira 26 kobo. That is a bargain, you know. So if you have a stock like that in your portfolio and other stocks that we can go on and on about, you would have the possibility of returning something way more than 16% within a horizon, like I said, of 5 to 10 years, which in my opinion is not so ridiculous for PFAs or institutional investors.
Now, some of the best performing companies in Nigeria have been on the building material side, the cement makers, the consumer goods side, and we've seen oscillation on the banking front. With the reforms completed by the end of December, are we going to see a reversal in that trend?
Unlikely. We would also still see those sectors, like you mentioned, the likes of WAPCO and those type of stocks. Guinness, NBL, they are performing strongly. We would see those stocks continue to perform, in my opinion. The banking sector, yes, will perform. And again, the Nigerian capital market is largely driven by the banking sector. So you would have obviously good performance there as soon as the consolidations are over and there's more clarity within that sector. Having said that, the WAPCOs, the Guinnesses, the NBLs, and stocks within that sphere would also continue to deliver the kind of returns we're seeing them deliver, and even outperform expectations, in my opinion.
And finally, big challenge, as I said, is where to invest. And the big argument is, where are the real estate companies here? Where are the teleco companies? What are the problems here with funding some of these sectors?
The problem with funding, let's take real estate, for example. For you to get a project in real estate done, you would need some form of debt secured. Now, the unfortunate thing is local debt in Nigeria is double digits, high-end double digits. So people are actually skeptical about taking that type of debt to fund the real estate project. So that is why you're seeing the slowdown that we're seeing within that sector, or the lack of expected activity we're seeing in that sector. So going forward, if we have single digits interest rates for debt, you would see more activity within the real estate sector.